Well, our next guest says having access to the Chinese market is crucial to a company like Nvidia, even if they have to pay to get it. Let's bring in Dan Niles. He's the founder and portfolio manager of Niles Investment Management, also former chips analyst at Neuberger Berman. Dan, welcome. So taking a step back here, just from an investor perspective, with all of this DC news, whether it's rare earths investments, a steel stake, now this chips revenue, this administration is far more hands-on than we've been used to in our lifetime when it comes to the operations of business. Is that anything for investors to factor in, or does it not matter?
I mean, it obviously matters, John, but the question is hands-on positive for U.S. companies or negative? And I think for each company, it's very different. So it's certainly something I take into account. The bigger thing for me is, do you have some stability of policy? Do you have a policy one week and then it flips the next? And right now, that's what concerns me a little bit more is this a stable policy where things get better from here? Or, a month out, do you find out that the U.S. has banned chips to China? Or you could have, down the road, China saying, hey, we're just going to ban the import of Nvidia chips and, make everybody use Huawei chips. So that's what I'm more concerned about to some degree.
Dan, if I remember correctly, you were skeptical of the longevity of this run in the market that we've had, but, in the short term, expecting that things would be good. It's been running for a while. What do you see in this market now?
Yeah, I mean, if you look at some of what I've written, I continue to believe there's going to be a melt-up between now and Thanksgiving. I mean, you can look at what's going on, right? You have the return of meme stocks, so American Eagle. You've got hot IPOs again in the marketplace, like Figma. You've got Bitcoin ripping to new all-time record highs. You've got blank check companies. You've got biotech companies now putting their treasury into Bitcoin to get their stocks to pop. Every tariff deal is looked at positively. The big beautiful bill helps tax implications for R&D and CapEx. And then finally, the biggest one of all, arguably, is you're probably going to have the Fed starting to cut rates starting in the September meeting. You probably get a preview of that at Jackson Hole. And so I think the market keeps running till about Thanksgiving, and then I'm expecting a 10 to 20% correction as we figure out this is demand that's been pulled forward, and holiday demand doesn't turn out to be that great. So that's kind of how I'm tactically looking at this market.
I was just going to ask you, Dan, why November, but you kind of touched on it. It sounds like you think there's a pull forward ahead of that. I mean, does this feel bubblicious to you when you make a comparison with some of these things like specs, for example, to 2021?
Absolutely. And remember back in 2021, you had CPI start the year at 1.4%. It went to 7%. And the Fed said it was transitory. Everybody wants to believe it's transitory. And the S&P is up 27%. So now everybody wants to believe that 38% year-over-year growth in imports that we saw in Q1 for the U.S. economy inside GDP, right? And the U.S. is 25% of global GDP. And you've got imports up, 38%. Everybody wants to believe, oh, well, that's just natural demand. It clearly isn't. And you started to see some of that give back already starting. But I think what's going to happen is these tariffs, which everybody seems to be okay with, you're going to take tariff rates, which under President Trump's first term went from 2 to 3%. That 3% is probably going to go to mid to high teens. And that's going to start to filter through in prices. And then I think you're going to figure out that a lot of companies, as well as individuals, bought ahead of those price increases that they know are coming. And holiday sales are just going to be a little bit disappointing. And the market is obviously priced for perfection. And if you have a melt up into it, which is kind of what you're seeing,
okay,
I think that's a recipe for disaster.
So what would you be buying right now? What are you bullish on right now?
Yeah, I mean, you can be pretty much bullish on everything, right? Because the market just rotates from sector to sector. Like last week, it was Apple. The laggards, Google, they all went up, taking the market higher. And, you're seeing some of the lagging sectors starting to bounce. But for me, it's more of a, you have to have a barbell approach right now, I think, where have some of the mega caps that you think are doing well, performing well into year end. But you can also take some risk until the market tells you that it's actually looking forward versus being in this bubblicious time period like you were in 2021. So we have things in, in healthcare, in energy, in defense stocks where we're further out on the risk curve while still owning some of the Mag 7 that we like the most, like, the names I've talked about before,
Right.
the Nvidias and Microsofts, which we've written about.
And Dan, how much cash?
Well, I mean, I think for right now, cash is not something I'm worried about because, as I said, I think the market can continue to melt higher. And in that scenario, you're trying to deploy, all the capital you can to take advantage of that. And so that's what we're doing. But I think when we get to that closer to Thanksgiving, or if the market tells me, hey, we're starting to get a little bit more rational, then I think we've had over 50% cash before. And I can see that returning to the forefront and along with a lot of shorts.